Hello traders, welcome back to another video and welcome back to Rally Tap Investing. In today's video, I want to share with you a simplified version of the order block strategy. This is the last video on order blocks that you will ever need to become a successful trader. Alright? Now, what are the things I want to share with you in this video? Number one, I want you to observe these 4 golden rules. Adhere to these 4 golden rules if you want to trade the order blocks successfully. Number 1 rule is that don't buy or sell at impulse leg. Buy or sell at retracement. Rule number 2, don't sell at discount. Don't buy at premium. Rule number 3, follow the mitigations. Rule number 4, don't trade until liquidity is patched. Now, adhere to these 4 golden rules. Now, apart from these 4 golden rules, there are 3 important concepts I'd like to share with you. These 3 concepts I'm about to share with you have changed the lives of millions and millions of traders around the world. And if you follow these 3 concepts, if you master these 3 concepts, then you will begin to trade like a professional. Now, what are these 3 important concepts? Number 1, you need to fully understand your higher time frame perspective. Number 2, you need to understand your trading ranges. When I talk about trading ranges, I'm not talking about sideways or consolidation market. I'm talking about your price ranges where you can take your trades from. And number 3 important concept I want to share with you today is that you need to know where to find your valid OB within your trading range. Now, let's get to the whiteboard and let me show you exactly what I mean. Let me show you what I mean. Now, assuming we are in an uptrend, all right? Assuming we are not in an uptrend, all right? Now, you know that in an uptrend, the highs are violated. All right? The highs are always violated in an uptrend. All right? That is the characteristics of an uptrend. Now, you want to buy. You want to buy at this area. In the case of an uptrend, you want to buy here. All right? You want to buy there. You also want to buy here. All right? These are the areas you want to buy in an uptrend. Now, the problem that many traders are facing is that when they go to their higher time frame to check for their directional buyers. Now, let's assume that this is a 4H time frame, which is your higher time frame, for instance. Now, a trader goes to H4 to look for directional buyers, and then he finds this bullish structure. The trader just immediately concludes that since the market structure is going up, is bullish, it drops down to its lower time frame and then goes straight to look for long trades on its lower time frame. This is where many traders go wrong. It is not enough for you to know that the structure of the market is bullish or bearish. It is also important for you to know where you are in space on that your on that your higher time frame. You need to understand where you are in space on your higher time frame. Now, let me explain. Now, if you open your chart and then you find price at this point here now, for instance, this is a good location for you to want to look for buy opportunities to follow the market up. All right? Or you open your chart, you find price around this area. It is still a good opportunity for you to look for buy opportunities to go long. All right? But immediately price crosses your 50% level, your 50% FIP level, and it's now at the premium zone. If price is at the premium zone, in the case of an uptrend, now, traders often do this mistake of entering long trades when price is already at premium zone. In the case of bullish market, this is wrong. This is where traders are having it hard time. All right? I need you to understand this very well. So the first concept is that you must understand where you are in space on your higher time frame. That is, you must understand your higher time frame perspective. That's the number one concept. The first concept I want to share with you. You need to master where you are on your higher time frame. Is price trying to retrace as at the point you open your chart to see? Now, if it's trying to retrace, are you supposed to buy on the impulse leg? Remember our 4 golden rules. Do not buy or sell on impulse leg. Buy at retracement. That is the number one concept I want to share with you. Now, the second concept is understand your trading ranges. Understand your price ranges. What do I mean by price ranges? I've discussed this before in our previous videos, but just to quickly refresh for the sake of this teaching. Now, what is your price range? Your price range is your swing high and your swing low after the break of structure. Your most current swing high and swing low after the break of structure. Mark that. Very, very crucial. All right? Now, in our previous videos, I've told you that when price breaks structure, your focus as a trader is to mark out your highs and lows with horizontal lines and wait to see what price action will do around it. Now, take a look. This is your swing high. All right? This is your swing high. And here is your swing low. All right? Now, when you have marked out your swing high and your swing low such as this, after the break of structure, this is your trading range. Between your swing high and your swing low is your trading range. I want you to understand that very well. Now, what do you do with this your trading range? Why is it important? Well, your trading range is important because this is your playing ground. This is your playing field to look for entry opportunities. It is a useless venture for a trader to go all over the chart looking for where to enter trades from. All right? Now, you need to narrow your focus to a particular point on your chart where you can find your OB and enter trades from. That is the professional way of trading. All right? Now, what you do with this, your trading ranges is this. If you are a beginner, for instance, now you pick your fib tool, you mark from this swing low because we are in an uptrend, we are in a bullish structure. You pick your fib tool, mark from, place it from this your swing low and drag it to your swing high, and it will give you 50% fib level. Anything above the 50% fib level is premium. That's premium pricing or premium zone. Anything below the 50% is discount zone. Let me just quickly show you an example of what I mean now. Let us assume that this is your 50% fib level. Any OB that meets the OB conditions, a valid OB conditions. Of course, if you don't understand how to determine a valid OB, now you need to check our playlist, to go back to our videos and watch them before you come to this one. Now, when you have gotten your 50% fib level, any OB you find above the 50% is what is known as premium. And any OB around the premium, if you are selling, is a valid OB, if it meets the conditions of a valid OB anyway. Now, below the 50% is your discount zone. Any OB you find in below this your 50% level, if it meets the conditions of a valid OB, that OB is a high probability OB. I want you to understand that. All right? Now, that is what you need to know about your price ranges or your trading ranges. You need to trade from range to range. Immediately price breaks the swing high here to the upside. In the case of an uptrend, you are in a new trading range and then you need to mark it out. If price breaks this your swing low here to the downside, then perhaps it is time for you to start looking for sell opportunities, that is using our confirmation entries. Right? Now, that is all about your trading ranges. Now, the last concept I want to share with you is that where do you find your OB within your trading range? Now, I have already explained that partially now. where you find your OB, in the case of an uptrend, you want to find a valid OB within your discount zone. In the case of bullish market, if the market is bearish, you want to find your valid OB within your premium zone. All right? For me, I like to take the OB that is at the extreme of my discount zone in the case of a bullish market. If it is a bearish market, I would like to pick my OB from the extreme of the premium zone. All right? Now, enough of that. Let me show you some examples on the chart quickly. I don't intend to make this video too long. All right? Now, let's play price for us to see what is actually going on. All right? I want us to play price. Just a minute, guys. Just a minute. All right? So let's play price and see what actually we want to see. I want to show you step by step on how to trade the market. Now let's start from here. Let's start from here. Let's start from there. All right? Let's start from here. Now, as you can see, I've already marked out this break of structure here. As you can see, price pushed up, formed this little consolidation, and then push up again. For those who are trading supply and demand, this is rally-based rally. All right? So, this low here, as you can see with this red horizontal line, is a break of structure. All right? Price has broken structure to the downside with a body candle close. Do you see that? Now, if you're an aggressive trader, you can decide to take your trade using this OB. This is your OB here. If you're an aggressive trader, this is your OB here. An aggressive trader, what I mean by aggressive trader is that if you are the type of trader that enters the market with only one break of structure, all right? Now, this is your OB, all right? You can mark that out and take your trade from there. But I personally don't trade that way. And at Rally Top, we don't teach our traders to trade that way. All right? We don't encourage them to trade that way. Now, price broke the structure and came down. And then pull back up. This small pull up here. Can you see that? And drop again. All right? That is your second break of structure. All right? Now, let's play price a little more. That's your second break of structure. Okay. Let's play price and okay. Now we have gone too far. I'm sorry about that, guys. We have gone too far. Now take a look. Take a look. This, for instance, now this is your second break of structure. Remember what I said? The first concept is understand your higher time frame perspective. As you can see, we have broken structure twice. Price was running up before. Now we have broken structure twice. We are now in a bearish move, a confirmed bearish move. All right? Now, if you don't understand what I mean by a confirmed bearish move, you need to join our Telegram group so that you can learn more about that. Now, that is the first concept, understanding your higher time frame perspective. The second concept I want you to understand, I told you about, is understanding your trading ranges. Now, remember, I told you your trading range is your most current swing high and swing low. And here is our most current swing high. Can you see that, guys? That's our most current swing high. And here is our most current swing low. Can you see that? This is our most current swing low. Do you see that, guys? Now, this is the second concept I want you to understand. I ask you to really master the second concept. Now, the third concept, remember, when I told you about this second concept, I said, what do you do? I asked you what to do with this your trading range. Well, like I said to you, as a beginner, you take your flip tool. Here we want to sell. All right, we have established that we are now bearish. We want to sell. Pick up your fib tool, measure from the swing high to the swing low here. It will give you 50% fib level. Now I said anything above the 50% is premium, and anything below the 50% is discount zone, right? Now, and the next thing I told you is, where do you find your valid OB within your trading range? We have established our trading range. This is our swing high, our swing low. This is our trading range. This is our playing field. All right? Now, where do you find your OB within the trading range? All right? Where do you find your OB within your trading range? All right? Where do you find your OB? Now, here is your OB. Remember, I told you your OB should always be at the premium zone. I told you I enter my own at the very extreme of the premium zone in the case of a downtrend like this. Remember I told you that? So that is your OB. Let's push it down a little. This is your OB. All right? This blue candle here is your OB. All right? That is the blue candle before the break of structure. All right? So that is your OB. As you can see, this OB is at the extreme of this trading range. All right? So you can refine this your OB. You can refine it. You can refine it to 50% of the OB. Most of the time, I like to refine my OB to the 50% of the OB. Now, if we want to refine it to this 50%, right? I want us to see something. This is 72,763. Oh, no, 72,747. 72,747. That is our 50%. 72,747. Let's check that out. All right. Let's get 72,747. That is the 50% of our OB. All right. This is the 50%. And then let's frame our trade to this 50% and see what happens to it. All right. Let's frame it to this 50%. Sorry, guys. Now, where do you put your take profit? It is either you target this take profit here, I mean this low here as your take profit 1, or you target this very low here as your take profit 2. But I'm going to target that take profit 2, all right, because that is also a significant low, all right. So I target that, and this will give us 1 to 6 or 1 to 7 R. This will give us 1 to 7 R if it works out in our favor. All right. So let's play price and see what happens. Let's play price. Now, price tap into. Now, can you see that? Price tap into our OB precisely to the 50% OB and drop. Can you see that, guys? That is, it is as simple as that. There is no reason to overcomplicate things here. As simple as that. Now, that's the first example I want to show to you. Let's just do one more example and then we call it a day. All right? Let's do one more example. So we call it a day. Let's do one more example. Let's do one more example and then we can call it a day. All right? Let's just do one more example and we call it a day. All right? One more example, we call it a day. Oh, sorry guys, sorry about this. Let me clear off everything so that we can start afresh. All right, now this is USD card. All right, this USD card. Let's just see where we can take this trade from. Let's look at where we take trade from. I want us to clear up some things so that we can all right, okay, so let's see where we can. Okay, let's start from here. I want you to follow me step by step, guys. I want you to follow me step by step. Let's start from here. Let's start from there and see. Now, I told you in our previous price now push down, created this low here. Can you see that? And push up, then drop again to create a lower low. Now, take a look at this break of structure here. Take a look. This break of structure. All right, price broke structure there to the downside, creating this low, isn't it? Now, let's play price and see what happened. Now, take a look at that. Price broke structure and printed this low. And after printing this low, price rallied up to break this structure high here. Can you see that, guys? To break that structure high there. Can you see that? It broke the structure high there. Now, some people will call this a strong low, and this is a weak high. All right? Now, it broke the structure to the upside. What does that indicate to you? It indicates a bullish intention. Remember, we're in a downtrend before price. Now, push up to break the last lower high there. Let's play price forward and see what happens. All right? All right. Okay, guys, take a look. Price pulled back down after breaking this structure high here. It pulled back down, but failed to close below this previous low here. I told you this is a strong low. This is a weak high. Now, price failed to take out this low here. Instead, it created a higher low. A higher low, indicating that this is a shift. This is a shift in structure. All right? That's a shift in structure. Now, after creating that high, it broke structure again to the upside. Can you see that? It broke the structure to the upside. All right? Now, immediately, remember it broke structure here and it broke structure again to the upside here. All right? Immediately after this break of structure, you should be able to know where is your, you should be able to know that we are now bullish. Price has changed. Remember our first concept, know your higher time frame perspective. Price has now changed from bearish to bullish. All right? With this structure break here. Can you see that, guys? Now, let's look at what happened. Immediately after this break of structure with this blue candle, smart money printed this down candle. All right? Now, where is your trading range? Remember your trading range? Don't forget about that, your trading range. Very important. This high now becomes your trading range. This high is your trading range. And this low is your swing low. This is your swing high. This is your swing low. Remember, your trading range is your swing high and swing low after the break of structure. Remember that? Now, what do you do with this, your trading range? If you are a newbie again, I repeat, you use the flip tool. Because we are now in a bullish condition, you use the flip tool to mark from your swing low here to your, you measure from your swing low to the swing high, and then you have the 50%. Anything above is premium, anything below the 50% is discount. In this case, we want to buy, so we are looking at anywhere around the discount zone to find a valid OB. Your valid OB is found in this case at this discount zone. So where is our valid OB here? Where is our valid OB? Take a look at this very candle here. This black candle here. That's your valid OB, guys. That's your valid OB. Can you see that? That's your OB. That doji candle is your OB. Right? Now, let's frame this up. You can refine this OB to the 50%. You can refine it as you like it. All right? But let's just let's frame this one up and see where we are now. All right? So you can target this high as your first take profit, and here as your second take profit. But I will target this high because it's a significant high, and price is likely to be attracted to that very significant high. All right? So, and that will give us 1 to 8.61 if it goes in our favor. So let's play price and let's see. Price tapped into our OB. Can you see that? Price has tapped into our OB. Price has tapped into our OB, and we are having this accumulation, this ranging market. All right? Let's see what price will do. Let's see what price will do. Let's continue to play price and see what it will do. Now, can you see that, guys? Can you see that? Price has hit our take profit. Can you see that, guys? Take a look. Price has hit our take profit for 1 to 8.61. I think so. All right? So it's as simple as that. You don't need to overcomplicate things, guys. The forex market is not hard. It is we human beings that make it look hard. All right? As simple as that. Keep your trading system simple. All right? I hope you had value in this video. Now, please, if you enjoyed this video, don't forget to give us a thumbs up, comment and share with your friends and families. And if you have not joined our free Telegram group, please do so just immediately. Link in the description below. And I'll see you in our next educational video.